There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Happy hump day. Welcome to the COB. I'm Juliette Sarli. Not such a happy day for the overall market. Of course, we hit records yesterday. We sold off pretty much virtually on the open today. A lot of that can be attributed to index leader CBA falling after its results. Analysts basically saying it really had to blow it out of the park to impress the market, particularly when so many brokers have a sell on CBA. But elsewhere, we have just seen, a lot of fears coming through in the overall banking sector, lowering the overall market, particularly when investors are questioning some of these lofty valuations. A bit of a rotation into healthcare and materials today, and stronger iron ore prices also helped out some of our big miners. So let's get to the overall themes of the day, and it really was this banks tank on the back of CBA crashing today. We'll get into that in a little bit more detail, but of course when you have a stock the size of CBA falling by as much as 6% as it did at one point, it is going to drag down all the other banks as well. Nadine spoke to the CEO, Matt Comyn. You can find that interview on our website shortly, and really just looking at as well at the outlook for the bank here as it joins up with OpenAI. Then we had AGL losing its spark, its fall in profit, a loss of $98 million, really sending its share price plunging today and dragging on the overall utility space as well. I spoke to the CFO, Gary Brown, though, and they are really forging into looking at the clean energy space, this $10 billion move into batteries and really trying to look at powering data centers. And of course, they're also kind of just everywhere. You can have your mobile phone, your internet, your Netflix, and your electricity all with AGL. They said their customer retention is looking pretty solid. And a payday pop, we did see wages come in a little higher than some had anticipated. Wages growth of 3.4% for the year, this coming after the RBA cut rates as expected yesterday. Interestingly, ANZ, I spoke to Adelaide Timbrell earlier, they're only expecting one more cut in the cycle. We get the jobs data tomorrow, and I'm going to be speaking at 11:40 with Justin Smirk from Westpac and Phil O'Donoghue from Deutsche Bank in a bit of a roundtable discussion. So make sure you join that to get a clear idea of how some of their leading economists are viewing our overall economy. Let's have a look at the banks, though, really dragged down by CBA today, which has finished the session down 5.3% or $9.55 to $169.54. Quite a lot of broker notes coming through today with that big sell on CBA. The utilities, as I mentioned, really dragged down by AGL, falling by some 13%. Origin Energy down by about 2%. It reports next week and we'll be speaking to them as well. Having a look at the miners, though, there was some bright spot there, a bit of rotation coming through. Iron ore futures also higher, back above $102 a tonne. Steel mills in the Chinese production hub of Tangshan ordered to halt operations to improve air quality ahead of a major military parade. So that was supporting some of those prices. All right, well, we touched on CBA's full-year cash profit, a record $10.25 billion, but the share price punished. IAG, closing fairly flat. It is expecting moderating insurance profit in full year 26. We also spoke to the CFO, William O'Donnell there. You can find that on our website. And I mentioned, of course, the interview we had with AGL2 shares finishing down 13%. Heading the right way was Evolution Mining, a record profit of $926 million, more than doubling its results from the prior year. And Treasury Wine Estates finishing higher as well. It's launching an on-market share buyback of $200 million it did post a statutory net profit of $436.9 million, which was up almost fourfold, and Computershare was lower. Earnings and forecast missing there. Dexus Industrial REIT also falling on its outlook. Emotive hitting a 5-month high on its robust outlook, and Tyro Payments at a 17-month high after confirming takeover interests. Let's welcome to the COB Kai Chen from MPC Markets, who joins me in the studio. Great to see you, Kai.
Pleasure to be here.
So tell us what you thought of the CBA result and the overall impact on the market.
Oh, I think it's not a surprise. I mean, they did release results as expected. So, but I think, given the valuation, we're all looking at it going, wow, where is it going to stop? So it's not a shock to say that the stock prices fell, by 5% today. I think the question is, what's the risk on the table for CBA? Because I mean, the operations is fantastic, right? So CBA is a strong bank, and we've seen that over the last decade. They always deliver. But I think the valuation is really the concern for the market at the moment, and especially with rate cuts, the NIM compression could be on the cards as well. But yeah, I don't think we could ever recommend a buy at these prices. It is probably one of the most, or I think it is the world's most expensive bank in terms of valuation. So, if it goes down a bit further, maybe it presents an opportunity. But at the moment, I'll definitely let it run its course.
So did all that money that went out of CBA go into the miners, or what are you thinking? Yeah,
it's really interesting. I think that's the miners obviously over the last year has been taking a bit of a beating, both iron ore as well as lithium. We saw a bit of a recovery in the lithium sector over the last couple of days. So with Liontown, with Pilbara, they've bounced back a bit, but it's still fairly depressed prices. In the iron ore sector, Fortescue, we're seeing a bit of strength. It went down as low as I think in the mid-16s. But it's bouncing back. There's a bit of strength in the Chinese market at the moment. So it's interesting to see how far it will go. But I think the negative expectations over the last year, it's correcting itself. And as you said, there's a bit of sector rotation. But the shining spot, gold, we saw Evolution report today, spectacular results. I think it was a record dividend. So, basically paying out 3 times it paid about 13 cents per share. So a lot higher than what it paid out in the previous run. And no surprise because, the profitability is fantastic. I think their producing cost is averaging about $1,200, but they're selling it for about 4.3. So, there's a huge margin in there. And the precious metal thematic, I think it's going to continue. So.
What are you looking at in terms of when you look at some of these reports that are coming through, particularly when it comes to artificial intelligence and CBA obviously having that big tie-up with OpenAI as well? Yeah,
no, it's interesting. But, CBA is such a behemoth in the sense like the processes in there are very stuck in its way, and to move pieces and to implement new technology, I think there's a bit of inertia to overcome. So, it's great that they're adopting new technology. But at its core, I think there's probably a lot of red tape within CBA to change that. I do have a friend who actually works as a dev over there. So, there's processes that they have to overcome. It won't be like a tech startup where, you can create these new technologies and implement them very quickly. So, yet to be seen, but maybe they do something useful out of it.
But it could lead, at least in some way, to job losses in customer service and the like. I talked to AGL about that as well. That's obviously helping a lot of these companies' profitability, but what happens next? What are you looking out for?
Absolutely. I think the customer service job is probably the most at risk in these companies, and especially the front line where, if you have telephone staff or things like that can be automated with AI. But I do think at the end of the day, there still needs to be a human touch in the services, but it might be an evolving role where, it's reallocated to more marketing or in other facets of the business. But I do definitely think there's going to be massive change in terms of the workforce. Yeah.
Let's talk about the economy. The RBA cut yesterday, wages growth out today. We've got jobs tomorrow, always a difficult one to predict. But what are you sort of seeing in terms of what happens next? Yeah,
it's interesting. I think the surprise was the month before where it was pretty much all priced in terms of the rate cut. They chose not to, but then weaker unemployment figures came out over the month, and I think that's what really tipped it over this month to result in the rate cut. Going forward, I think the expectation is for one more, but I think at the moment it's really heavily economic data dependent, and as we saw, wage price index came out today. I think it was pretty close to expectation in terms of 0.8 for the quarter. But if we do see weakness, it gives the RBA a bit more room to cut. However, if we're seeing, I think inflation is relatively under control, seeing all the past figures. So there is probably a bit more space for them to cut in this cycle, but it's really economic dependent.
And what are you looking out for as we round out the week in terms of some of the other companies coming through? And I guess to another point, you really have to impress in order to be rewarded by shareholders, right? And AGL today is an example of that too.
Absolutely. I think that expectation is built into the price because, you have a lot of the analyst consensus. If they miss on earnings, especially in the mid to small cap stocks, it really gets punished. And, we've seen that over and over again where the bounce back is, there's not much liquidity in the smaller cap stocks. So, it might go down 30 or 40% and it's probably like half a year to a year before it has a chance to recover. So, there's a lot on the board over the next 2-3 weeks. Treasury One was an interesting one that came out today. Actually, it's been fairly beaten down. We did have it before we sold it. But it's interesting because obviously with their business model, their Penfold line has been stagnating, and which is their flagship segment. But however, in terms of valuations, it's very, very cheap at the moment. And if there's a China recovery story, most of the flow from that Penfold line is China based, right? So I think it presents pretty good value at the moment. And
another one tomorrow is sort of a market darling, Pro Medicus. Are you looking out for that one?
I wonder how much higher it can go. It's that's certainly not based on valuations. Obviously there's a lot of growth expectations priced into that stock, and over the last 2 years, it's one of the leading stocks. So I'm not sure. To be honest, I'm not sure because it's really hard to gauge in terms of expectations. How it's hard to deliver on that because the expectations over multiple years. So I think if they report weak, they will possibly sustain a fall in the price.
Yeah, might be punished. We are going to speak to Sam Hupert around this time tomorrow. Kai, thank you so much.
Pleasure.
Kai Chen from MPC Markets. All right, well, the stock of the day was, of course, CBA, and Nadine was joined by Sanjay Narendran from Team Invest and Michael Gable from Fairmont Equities.
All of the banks, I'd say CBA is the best, and if you needed to hold a bank in your portfolio, then that's what to hold. But the prices now and what you're getting is very, very stagnant. It'll just stay there. So you may even be better off in a term deposit than trying to grow your money at 1% annually.
We did sell out of our CBA position finally a few weeks ago. We're running a trailing stop. It triggered that. So look, we're out. At some point, the run comes to an end. But as I agree with Sanjay, it's the best bank out there, so that's the one that you target. But I think to grow from here, it is very incremental. You've got population growth. You can cut costs a bit with AI or whatever else you're going to do. They could compete against the other banks, but.
All right, a down day today. Let's have a look at some of the leaders who tried to push us higher, including Alcoa and Qantas having a very solid day as well, up 6% to $11.60. Life 360, which came through with its results yesterday, continuing to rise, up 5.6%. Data 3 also looking good there. The laggards, well, AGL, we touched on that, down 13% with its net loss of $98 million. The lithium and some of the energy stocks are also coming under pressure. Of course, CBA, which we've touched on as well, closing down 5.3% to $169.54, which is still well above where many people think it's valued. All right, these are the small end of town winners, including AML 3D, up 16%. And to the downside, MoneyMe, down 7.4%. Austin Engineering, of 5.3%. Tonight, a few FOMC members giving speeches, including Raphael Bostic, Austin Goolsbee, Barkin as well. And then we've got Cisco earnings coming through. We're getting to the tail end of quarterly reporting season in the US. Tomorrow, the key one, jobs data. CBA saying 20,000 jobs could be created. We'll wait to see. It's always very volatile, that series. And then in terms of some of the big earnings we're watching out for, Pro Medicus, Suncorp, Orica, Temple & Webster, and ASX will be an interesting one, particularly amidst this clampdown on its monopoly and the very big mea culpa it had with TPG Capital and TPG Telecom a week ago. All right, let's have a look at where the local market has finished the day, down 0.6%, easing from those record highs. The ASX 200 has finished the session lower by 53 points, or 0.6%, 8,827. Look, we're still above 8,800 points, so looking pretty solid there. It was the utilities dragged down by AGL, the financials dragged down by CBA that were the biggest laggards. And as Kai mentioned, a switch into materials players today. The REITs also looking solid after yesterday's interest rate cut. All right, that does it for today. We'll be back from 9:45 a.m. Eastern tomorrow. Have a great evening.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.